What's going on, you guys? Today, we're going to be talking about futures. Okay. Let's talk about futures and why, if you are currently trading CFDs or you're using unregulated brokers, why you should switch to trading futures, right? Let's say you're trading indices such as US 30, NAS 100, etc. Now would be a good time for you to switch over to trading futures for a variety of reasons. I have another video I talked about that in depth. But yeah, this video is to give you clarity on how you can move into trading this new market for you, which is futures, right? So let's just talk about the very basics. Like, what is a future, right? What is a future contract, right? A futures contract is simply a legally binding agreement. It's an agreement, right, to buy an asset, whatever it may be, at a future date or time. That is all. That is what a futures contract is, right? And usually futures are traded electronically. And that's where we get the name E when we're talking about E-mini futures, right? The instrument that you will be trading are the minis, right? The minis are pretty much a fraction, a fraction of a standard contract, right? So I'll give you an example. Let's say you trade US 30 index, right? You trade US 30 or whatever index, and you want to see what is the equivalent futures, future contract for US 30. Well, that's YM, right? It's YM. Let's go through all of the indices. Let's just start with the S&P 500, ES, right? That's the symbol to trade. That's the future contract. Now, NQ Nasdaq. Let's talk about YM Dow Jones, right? It's as simple as that. Just trade the futures, right? You have to learn about contracts. Just that idea, that concept is very simple. And I can explain it in another video in depth. But if you want, I'm going to talking about that a little bit in this video. Okay. So the futures markets are open pretty much 24 hours a day. Okay. 24/7. Or really it's 6 days a week. So 24 hours a day and 6 days a week. right? But you have to remember that each product has its own hours, right? Its own unique trading hours. Okay. That's pretty much the basics of what futures are and what futures you can trade if you're used to trading CDFs, CFDs, excuse me, right? Right. So now let's, just talk about what it is exactly that, um, what symbols you should search for, right? Let's look at what symbols you should search for. Um, let's say you have found a regulated broker. You can use, for example, Trade of 8, great broker. Let's say you're on that you've connected your Trade of 8 brokerage account to TradingView or whatever platform you're using, and now you're gonna search the symbol. Like where can you find this these futures? So when you trade futures, you have to go and look at the symbol. So let's start with YM, which is the Dow E-mini futures. When you look here, you actually have to you have to select what the future month is. So the contract month, that's very important. Um, this represents the general future. I don't know if you can see that. General the general S&P the general E-mini Dow future contracts, but you must actually click this. Right? This is what you're looking at. YMH24. What does YMH24 mean? Right? Well, every future has what's called a contract month, right? And what that pretty much is we have a contract month, right? Pretty much every future is a contract to buy or sell an asset at a future date. So these contracts expire, and each contract month has a certain level of volume. So what you should generally do is trade what's called the front month, right? You should trade what's called the front month. Okay. And the front month is pretty much the next month that is ahead of you. I'm writing this the same time that I'm recording. So here we go. The front month is the next month, the subsequent month. So every contract month, right, has its own symbol. So for, as you can see here, the symbol is H, M, U, and Z, and those stand for March, June, September, and December. Right now we're in February. So we should be trading the March contracts. So add that into your watch list, and that's what you'll be trading. That's what you'll be placing trades on, right? So usually when we trade futures, um, we want to trade the future with the contract month that has the most volume. Because as traders, we're looking to trade the instrument that is most liquid, right? The more volume that a contract has, the more liquid it is. Okay. So let's say you're now going to trade. Let's go back. Let's look at well, let's just search another symbol up, right? We search ES, S&P 500, E-mini futures. You'd have to trade the front month, which is March, this upcoming month, right? That will have the most volume. Okay. I might have to switch or split this video into multiple videos, but if there's anything that I've said so far that you have a question about, drop a comment or send me an email and I'll explain it to you further. Okay. Okay. Right. Another thing you have to look at when you're trading futures is the idea that for every point up or down, that, for example, that futures contract moves is worth a certain dollar amount. So if you're trading, for example, ES, every point is worth $50. I'll go down the list. Right? ES. Right? NQ. NASDAQ. Right? YM. Every point is worth $5. NASDAQ, every point is worth $20. Right? And yes, every point is worth $50. And you can see this very easily if you actually look at the security info that is provided. If you come right here into this section, you come right over here and you click on the security info, and it'll tell you the point value for each point of the S&P 500 E-mini futures is $50. So what does that mean? That's per contract. Let's say you have one contract of ES. You have one contract, right? And you got in at a certain spot, at a certain position, and price moved down 10 points, right? Well, now your one contract is equal to 10 times $50 per contract per point. Just 500. So you can see how fast this scales, or at scale, how much value you can gain or lose in the market. Okay. Which is why many people just starting out trade the micro E-minis, MNQ, right? Which I'll get into another video about later. But all you have to know is that, for example, if we're trading the E-mini Dow, which is worth $5 per point, and we get in here, for example, we get in right here. We get in right here at 5,000, and we go short and we sell at 4,990, right? That's 10 points. And that one contract is equal to $50. That one contract is equal to $50. Right? So I think you get the point now. Again, you have any questions, let me know. Leave me an email or drop a comment. I'll be glad to explain a little bit more. I wanted to get through a lot more in this video, but I was only able to get through a little bit, enough to give you an idea of how the futures work and what you can trade. I even told you about a broker you can use, and a good broker at that, and a few more of the basic knowledge that you need to know about futures. So if you have any questions, let me know. Send me an email or drop a comment, or you can message me on Instagram. Send me a message on Instagram, and I'll be glad to converse with you all. Okay. 2024 is the year where we must all switch from using unregulated brokers to regulated brokers trading new markets and learning new things, right? A chart is a chart. You can take your skills, which are applicable to every market. All right. I'll talk to you guys soon.